The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Great programming earlier on, and I hope we can keep that standard up. That's tough to do. And of course, we've got programming all the way through. We've got Think or Swim coming up immediately after this show. You've got Steve Rose, you've got Dave White, you've got Tom O'Brien back again. And let's just go through the numbers. Before I do that, I'm liable to forget. I've got the sheet right in front of me. I was surprised to see it because we've had one recently and now we're having one again. We have launched a new Spring Tiger Dollar sale today. This is one of our best sales as customers can get up to a 50% bonus. Hey, a 50% bonus? That's fantastic. Here is the link, and there's a link. It goes tfnn.com/mm/get $_2020_spring_special.php. The two pricing levels: spend $600 and receive 150 bonus Tiger dollars, which is 25% bonus, totaling 750 Tiger dollars. Spend $1,500 and receive 750 bonus Tiger dollars, which is a 50% bonus, totaling 2,250 in Tiger dollars. This is really, if you have any one of our subscriptions, my newsletter, the opening call, or Tom or Steve or Dave, Larry Pizzavento, if you have whatever you take, John Logan's subscription to his service, or if you're following Daryl, if you got Andy Heck, it just goes right through. So if you are an ongoing subscriber, this is a fantastic way to get a terrific discount. What more could you want? All right. So the E-mini that I'm showing you right now has gone to minus 250. Overnight, of course, with the bombing, it slumped about 10 points and it ran back up. And now it's kind of digesting these gains. Let's just go through this step by step. End of the week, I want to set it up for Monday coming. And of course, next week, this is the Easter season. This is the Passover season. It's a season to be looking at the spring. What's going to happen during the spring period going into the summer? And that's really what I'm setting up here. I'm trying to build up all the resources I have to be able to kind of not necessarily forecast, but to analyze and say what are the levels to watch for and what sectors should benefit. So we want to do this right now. For my subscribers, this is actually the most we've been short in quite a long time. And I'll explain why. And in all cases, we have pretty tight stops because it's either going to work or it's not going to work. Some of the shorts we've had for quite a while now, and it's kind of been correct in terms of the direction. But what is most important is that the inflection points that were met over the past week, the volatility, the buying pressure and the selling pressure, that's really what I want to speak to. So we've got 5 minutes before the next break, before our first break. Let's go. So now we're down 350. I'm just going to quickly show you a couple of things here. This is the 5-minute cash. And you see this down channel, the S&P 5-minute chart? See the way it made a peak E right at that top right there on the 5th of April at 23.77, come all the way down, made a large arch formation, almost looks like a staple upside down or an inverted head and shoulders. And my assessment is that the selling is going to start to increase very soon. All right, so let me just state that right up front, even though we're looking at a 5-minute chart. So you see the patterns, you see this pattern where you've pull back, you've gone real choppy, you've gone to a peak D. This is a 5-minute chart, 2 peak Ds in the Chapman Wave. I don't want to do it right now. Let's say 4 peaks is what we always look for, and then we have to assess in the Chapman Wave. So peak D is the one that's the most important, and this one looks to me like it could possibly fail. But the reason why I want to show the 5-minute, that's the cash. Look at the 10-minute. Oh, I keep hitting the wrong thing. Look at the 10-minute. The 10-minute in an up channel, and I love this. This demonstrates how you could look at different time frames. One could be in an up channel, one could be in a down channel. You have to put the whole perspective together. This is an up channel, but look at the patterns that unfolded. That becomes a peak E in the Chapman Wave methodology. It failed to make a left side, right side price time match, going back to the high that we were just speaking of at 23.61. Now, this is the one that was on the 6th, the following day. And look what's happening. It keeps coming back to the Chapman Wave inside track support level, and then it keeps failing. Rallies up to the top, then it keeps failing. That's what I meant to say. Now it's coming back to test it. So all we can say is if the S&P, the futures takes out 23.51.75, the low that was made at 10 minutes past 10 this morning, that's not a good sign. All right, but wait a minute. Patterns seem to, you have, because it's human nature, these are fractals. Look, it's the same sort of fractal that we're looking at here, except this time the 60-minute is in a down channel. Right there, that's the resistance. You've made a peak D once, up there at the top. That was the top at 11 o'clock on the 5th at 23.75. That was that cash that we were looking at. Now we pull back, run up to the peak D, fail. That sets up a down channel, or inside down channel, the Chapman Wave inside track repellent zone. We went to another D. Now, you know that I don't like when there's a rally that goes to a D and it doesn't go past the previous D on the left. That's usually not a good sign. It just says there was enough energy just to have a bounce. And and it isn't even a peak D, because I used a Chapman Wave phantom peak A right there, the 2 parallel highs. So this is actually a C, which could turn into a C minus, would be very negative. Once again, a break under 23.45 in this case says be careful, be real careful. All right, I wanted to get that out because I want you to show you how, look, we've got the same sort of thing here. You see this trend line right there? I need to do 2 of them. There's the other one. That trend line from the top that was made, look, the E-mini didn't break above it in the Chapman Wave falling ash formation, in the Chapman Wave inside track repellent zone is working its magic here. I'm very cautious. Why? Because if by Friday at 4 o'clock, if the weekly charts start to close at or below the 9-period exponential moving average, watch out below. That's all I'm saying. Okay, so that's the E-mini. Now we can run the numbers. The Dow, INDU. Exactly the same thing I've been talking about. And look at that weekly. If the weekly today, if the Dow closes 20,605, if it goes underneath that, closes underneath it by Friday, 4 o'clock, that weekly chart says, I'm going to put a down arrow at that peak D in the Chapman Wave 5 at 21,169. The MACD is just crossed negative and the stochastic down at 80%. This weekly is starting, and when the weekly whenever the stochastic holds for a long period in the 95, 98, 90, 97% area and then starts to go down, it doesn't come back very quickly. That makes me a little bit nervous here about that arch formation that should retest the 20,412 area in the Dow come next week if we close negative today. I'll be back. Basil Chapman. We'll go through these numbers as soon as I return. The Dow is down 17, he's down 3.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you could potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So let's just go on to this, and then I'll get to the questions that we have. So the Dow basically has gone sideways, except for that big spike we had 3 days ago, in which we closed negative. We're in this range. But look at the MACD. The MACD is flattening out, but it is way lower, and the stochastic's only at 43%, and it's not really showing any strength. And that says to me that the sideways to slightly lower highs and lower lows pattern should continue a little while longer. I'd venture to say that I'm quite prepared that if there is a spike in the Dow to 20,000, let's say it has to close above 20,850 and then follow that up the next day without a pullback. In fact, the next day has to go even about 80 points higher. I'm prepared to say that at least in the rotational aspect, we could be seeing something that's would be unusual. We haven't seen it yet. And that would be that the QQQ series, that is the power shares of the NDX 100, the NADEX, this is not the composite index. This is the NDX 100, top 100, that is. And if we're looking at this, then what we're looking at is there's an arch formation here, and we've already gone low enough for me to say that there's a really good chance that we've probably got a peak F and not an alternate count B in the daily chart. I'm watching the E in the weekly chart. The MACD is just turning down a little bit, but it's still very strong. Stochastic still at 92%. There'll be an incredible amount of work to do using time, maybe even not so much price, but time, for the MACD to pull back and the stochastic to pull back under 80% in the weekly chart from here. Let me just move this away right here, okay? And so I'm really looking at the chance that Amazon and Priceline and many of these the top 10, 15 NASDAQ stocks just have a digester phase. And that's going to be key, because if they have a digester phase, we might find, this answers a question that I just got. How about GE? Well, GE is actually acting quite nicely. It's up 6 cents, right? Not a great chart formation, but it's really holding pretty well. So that, in a sense, is giving me a sign that, yeah, we might be short because that's the trend that I'm looking at. But I also have to keep the stops fairly tight because we might have used up time. We've just over a month in this correction. We haven't really used price, okay? And then I was asked about GE, Triple M. Look at Triple M. Arching over, hasn't broken down at 190.11, up 22 cents. It needs to take out, the low today was 109.52. It really needs to be trading, 189. It needs to be trading below 188, and then I can say, now we're looking at a deeper correction. And UTX, which actually was acting better than Triple M up until 3 days ago, it's kind of stuck in a range, done very, very nicely. Not anywhere near its all-time high of 124.45 at 112.61 right now. But I must admit that it's gone sideways. It hasn't broken down, but it hasn't broken out. So when I put that together, I'm saying to myself, digestive phase, very important, but not a breakdown. And it's had every opportunity to break down and hasn't taken it, but it's also had every opportunity to break out, and it hasn't. Let me just go back to this for 1 second. Look at the pattern in the QQQ series. It's something we've seen so often. Spikes to a high, pulls back and creates some kind of a sideways pattern. Look at, we can go to Visa, same thing, spikes up, goes sideways. I mean, there's just tons. Yesterday I went through a bunch of them, of these charts that have spiked up and then pulled back, but they haven't broken down. They've used time sideways. You know, sometimes time sideways is also a distribution phase, so we've got to be real careful. So let me keep going on with the IWM, which is the Russell 2000. Lousy chart pattern, not bad on the day. It's at 135.50, down 8 cents. And in the weekly chart, it's just chop, chop, chop to the side. So I'm saying to you, at 135.55 in the next week and a half, if it takes at 132 support, that's telling us there's a real problem. If it holds in this pattern just sideways, it's saying I'm using up time. Look, I've used up time, in fact, for 6 months, just sideways, basically. So we're watching this one closely on the upside of breaking to the 138.50s. Very positive. Now let's go to the. Now we want to go to gold because gold last night spiked huge, and it's still up 14 at 12.68. This is leg F/B. Now this is very interesting. Why? Because there's a pattern that I talk about, and I haven't put it in here. I did put it in the. I think I put it in the GDX, but it's the Chapman Wave stalk leg formation, and that says that if you go to a D and pull back, and then you spike above it in this oval formation, there's a real good chance you're going to come and test the breakout. In this case, the breakout would be 100. So I keep saying 100. It's 1,255.5. That was the high of the 4th. So we're watching this real closely. But in the weekly chart, it's going to see, and it's real close to 1277, the 200-period exponential moving average in the weekly, and it's actually forming somewhat of a V-shaped pattern. The GDX at this particular stage has that. You remember we showed it yesterday. Chapman Wave stalk leg formation. There's the leg, there's the body, here's the neck, here's the head. It breaks out. It should come back and retest this area right here, 23.56. If I'm correct in the pattern, we'll see, because gold is getting some action here, and finally the gold stocks are beginning to move, as you can see in the GDX, and that's the gold miners I meant. So we're going to be watching that. Let's go to the dollar. Now, it's ironic. I said before that it's unusual to see you get a 5 to 6 week phase almost every year for maybe twice during the year where gold and dollar move in the same direction. That's not the same percentage. They're just moving up or down together. And look what's happened. The dollar's acting beautifully. It's acting well enough to say it's in leg B right now. And the MACD's histogram is expanding, and the stochastic's at 85%. I actually have no choice right now but to put in an up arrow. It can fail, but all my technicals say that you have no choice but to put the up arrow way above the 9-period moving average. Wait a minute, gold moving up, dollar moving up. So let's check oil. Oil is up 23 cents at 51.90. Excuse me, oil, gold. You remember we were speaking about this the other day? The 5 L's that we were looking at: Dolly, Goldie, Vixie, Bondi, and Oily. Hey, how can you have Where's the VIX index? VIX.X. The VIX index is up 51. Wait a minute, you've got your 5 elves up, and the market is, Dow's now up 77 cents. S&P's just under down 71 cents. This is very interesting. Why? Because you've had rising lows in the VIX index. It is at 12.88, real close to 13. Yet the selling pressure is not taking everything down. And it's Friday, so we'll see where the weekly close is on the VIX index. Or let me do this right now. 1328 is the 200-period moving average in the daily. If the VIX closes above 13 point, let's just say it's at 1292. So if it closes above 13.28, so if it closes above 13.32, and the Dow closes down 45 points or more, S&P closes down 6, I would say that would be a sign that maybe next week we'll start to see further weakness. Otherwise, it could be chop, chop, chop to the side. I'll be right back. Basil Chapman, Dow's up 5.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So I'm showing here the E-mini with the Chapman Wave parameters. These are the resistance and support levels. 2349 is supported, held over there. 2357 to 2358 has been the rejection area. It keeps pulling back. And we're watching this closely. So we're watching at least the patterns closely. So Pan American Silver, I was asked about, it needs a leg D above 18.43. So far, 18.42 is the the high. It needs 2 more cents to make a leg D to the upside. A lot of these silvers, look, ASA is one of my favorites. I was about to give it as a buy the other day. I gave something else, didn't quite work. This is the one I should have chosen. It's in leg D. Now, where is a leg D extremely bullish? When either it makes an instant restart within 3 bars after that leg D is made and it forms a peak D, or when it's on its way to much higher prices. Why? Obviously, you're going to get lots of Ds on the way up. It's very bullish because how else are you going to make higher highs unless you're going to go to a D? And there's this leg D. Let's go to the GDX. The GDX is in leg D right now. So if it's going to go towards the 27s, then it should have a whole series of new highs, and they could give you another series of leg A, B, C, Ds. Aha. But leg D in the stalk leg formation, I'm going to be watching this real closely, because if nothing happens geographically, politically, over the next 3 days going into Monday, you could see gold start to pull back a little bit here. But it is telling us, and I've been talking about this for a while, that gold should be part of your portfolio, because we're going into a period, we've been in, and we are going into a period that says that is an overall portfolio, real estate, stocks, bonds, whatever it is. Maybe you should have a little bit of gold, because it's part of that whole package. And I think that that's going to be important later on, maybe not just yet. Later on, I think gold is going to take off really take off to the moon, but I don't think it's yet. But later on, when I say later on, I'm talking about over the coming few years. So we'll see. All right, now I want you to do the TLT. Look at this. The TLT, we've been looking for a leg D. We got that D. But you see the Chapman Wave inside track repellent zone right here in the daily chart. Let me show you something. You see this that I drew in there? Well, it went up and it's gone back in. The stochastic's good at 82%. The MACD is good, but let me show you something that's very interesting. You know my weekly chart that I look at? This is the triple yields. I've got the 30-year, the white, made a peak F top. I didn't put I didn't even type it in. That was a 3201, 3201 the week of the 10th of March, and it's pulled back. My rule of thumb in this Chapman Wave drop bucket formation, double top formation, bucket, U-shape, cup, whatever you want to call it, is if the price falls down 1/3 to 1/2, be careful, because there's a real good chance you're going to hit the bottom. If you take out the bottom, there are other implications. Wait a minute. Didn't we just, look at that. 29.02 was the low, and the low so far this week is 29.39. We're getting real close. But wait a minute. The 10-year T-note yield took it out. That's exactly what I was talking about. There's a chance that if it takes it out deeper, it can go to a double. 1-to-1 to the one side, and the 5-year is just now sneaking below it. But the Fed has said we want higher rates. This is a real conflict. We just had results today. The figures, the economic figures that came out were suggesting much weaker than expectations. So I'm saying to myself, the Fed really, I don't think how they're going to be able to raise rates immediately. So this is saying that yields, especially the 30-year, I'm suspecting is stuck in a rectangle formation. It can go a little bit below. I think that the upside is kind of limited right now for yields, and that's the reason why bonds have gone to that leg D. And if I'm looking at wood, the I shares of the global timber and forestry, look, you haven't yet broken out above PD, but this is holding very well. The Philadelphia housing sector index below here, this is the weekly chart, F/C. So even if it goes to a higher high, it's going to then go to a D. I think this is going to be a tell over the next 2 weeks. What happens to both of these two indicators, wood, the global timber and forestry ETF, and the Philadelphia housing sector index, of course, together with bonds. So we make it 3. So now I think I've covered almost everything except the euro, EUR, USD. We're going to go to the questions that I have, a lot of email questions. Yeah, breaking down after the peak F, arch formation in the weekly. And remember the monthly, I said, it's not a great pattern. When you go from a lowercase h to a lowercase m, and you're breaking down below it, it makes it real tough. You have to get a V-shaped recovery and immediately power above the left side peak of importance, in this case, all the way up to the peak of November of 2016 at 1.129. It's called a 1.13. You have to break above that. That would be extremely bullish, and it's not doing that right now. So did I do the dollar? I think I did the dollar, DXY. Yeah, spoke about the dollar leg B. I said I have no choice right now to put an up arrow which says it should go to a C and a D. That's a little confusing, isn't it? Look, you've got your cup formation here in the weekly. The monthly is still holding beautifully. But wait a minute. Gold, surely they can't all go together. Gold's now up 13. So I'm thinking gold might just pull back a little bit here. Dollar has a little bit more strength. But I still think kind of range bound within it. So that's for the moment. So the question I had, the first question was statement, I think. Yeah, just a question about the XLF and the components. Look, the XLF, I drew in this arch formation for so many of the stocks. Didn't have time to do it. I was talking about it, but I forgot to do it. In the XLF, the financial S&P Spider Fund, and it's got a peak D already in the weekly. This is a sell mode in the weekly chart of the financials. And it's going to take quite a bit. It's going to take a move from 23.51 down 11 cents right now to about 24.50 for me to say, now I'm becoming much more positive about that, unless we can identify some kind of a low of importance. Next, and that goes with Bank of America. They say, look, all of them have the same pattern, right? Goldman Sachs. They all have the same pattern. This little arch formation, lowercase h in the Chapman Wave methodology. So I hope that helps you. Next question, I did the GE, UTX, etc. Oh, Boeing, I didn't look at Boeing. Boeing, look at this. Boeing announces record orders. And you remember what we discussed? I said to you, I'm always skeptical about airline orders. I've been around long enough to see airline orders dissipate. In fact, many of the countries are quite prepared to give up their deposits and say, you know what, we don't want the 35 Boeing, whatever it is. We're going to back off. We only want 20. We only want 10. We've seen it before. So this is going to be very interesting because Boeing is in leg C in the monthly chart, says it should still go to a D. But I would not be surprised if there's a period here, matching the market. This hiatus is just saying to us, needs time. I'm not sure yet if it has price. Now, I had a question, EUR, USD. This is the Euro-Japanese yen, a Euro-dollar Japanese yen currency pair. No. The Euro-dollar and the US dollar currency pair, peak F top in the daily. The B, there's an arch formation. Didn't I just look at that? EUR? Oh, it's the USD JPY. It's JPY that I want to look at. This is the... What am I doing? USD JPY? I got to type in a Y. USD JPY, not a U. Yeah, it's the same. It's trying to form some kind of a base here. Usually follows the dollar, not this time, baby. And I think that the currencies are stuck as the dollar is showing a little bit more strength than people would be anticipating. So, Basil Chapman, Tiger Technicians are about to take a break. Dow's down 4, S&P's down 2. I'll be right back. And we'll look at this chart as we go out on chart. Got to get rid of this one. Move it over here.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman, Market Vectors Oil Service ETF. Holding quite well in the here. It's at 30.86. I was asked about that. In leg B, peak B, kind of same pattern. But what's interesting is if I can go to the XOP, is it XOP? The Spider Oil and Gas, it's the same pattern, but the candle today is slightly better. So I'm looking at this and I'm thinking, yeah, chop, 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 could have a little bit of a bounce. We're going to be watching this very closely. So in the meantime, what I've done for subscribers is that we added to the shorts today. And what's really important about that is that we've also added to the long side more as a counter trend move. So the longs are not like stock longs or anything like that. I'm looking at sector where it is a particular commodity or something like that, because I think that there's a chance that there could be a move there as well. So kind of tentative initial moves. But what's most important is that within the context of the overall market, I'm looking at I get a question about Caterpillar, and it's holding very nicely, up 39 cents at 96.21, and that kind of goes a little bit with maybe the agricultural area. So let me just have a look at W, not so great. The wheat, not so great. So soybean. A better candle today. Okay, so now I'm putting this together here I'll show you exactly what I'm looking at. WSC. I want corn. Corn is pulling back. So if I'm looking at the TRCCI, remember that's the Thomson Reuters Equal Weighted Commodity Index. Let me just double check I got that name right. Yeah, Thomson Reuters Continuous Contract Commodity Index is the monthly chart. And there's, instead of the M formation, let me just explain what that M formation is. Looking chart patterns only. Remember, let's just do this. Here we go. We're looking at the weekly chart of the TLT. I just wanted to show you what the pattern looks like. If I can do this. Not there. Right there. TLT. Look. I just drew that in. That's the schematic I've been talking about, why I think that there's a choppy sideways pattern here. Look, you've got a lowercase h that goes to a lowercase m pattern, right? There's your h. It did take out the low, didn't close below it, but there's your second arch formation. So we've got to be watching this one real closely because that's what I think we're looking at. Now let's go back to what I was talking about, TRCCI. And what we're looking at is that the monthly chart has had a raise level. It hasn't gone all the way back. And that says that it's trying to create a platform, that the commodities are trying to create a platform that is possibly the base for a move a little bit later in the spring. maybe in another week or two, we'll suddenly see a push to the upside. But what I'm looking at right here is if the TRCCI trading at 417.89 up a penny, if it takes out the low that was made in November of last year of 408.57, let's call it 407, give it 406, 407. If it closes under that, that's going to be an arch formation that's very negative, and say commodities are headed much lower. So I'm just looking at this. I wanted to see where I'm looking for pockets of strength that I could look at to give a sense of the end of the quarter, the beginning of the next quarter. What could take the market higher? Now, let's just go back. Look, yesterday we were talking about Amazon, and I said I believe Amazon's made a peak, and it has. Look, peak D. MACD is still very strong. Stochastic still at 83%, but pulling back very sharply. If Amazon closes under 880 in the next 3 sessions, I think it's made a top in the daily that could permeate the action for the weekly, because that's a very strong leg E with a very long wick. It's like an evening star in a sense, but the MACD is still good and the stochastic is still good. So I'm suggesting to you that there'll be a pullback, but you've got tremendous support in the above the 9-period moving average of 856. That's a big deal, going from 923.72 down to 856. Why? It's 4 days worth of, no, it's 6 days worth of rallying. No, I'm being serious. It says that you could take a little period to digest these big gains, and that's really what I think is going to happen. If it's Amazon, if you look at Goog, this is Alphabet. Look at that arch formation, peak A, B, C. It'll become a C minus if it at 822. If it takes that 815 by Monday or Tuesday, there's your peak E in the weekly, leg D in the day in the monthly. I think that this is. I would not be taking the action right now lightly. And for those who have longs and you've done really well, I'm just going to say to you, you might want to take a little bit off. Just to have that money ready, that cash ready, because at some point I think we will get a minus 300-point decline out of the blue. I think it's more likely that we get that than a 300-point up at this stage, especially when I'm looking at the QQQ series, real close to giving signals that suggest a digestive phase. Let's look at price line, PCLN. Yeah, peak E in the daily, peak C, only a peak CE. No, I can't. That's a peak C in the weekly, so it could pull back. Leg D in the monthly. What was the other one? Let's look at Facebook. Facebook, peak F in the daily, leg D in the weekly, leg, I don't know what it is in the monthly. It should be an A, but I'm going to give it. I'm going to call it. Calling it F/A for now. Okay. But in the meantime, back at the ranch, if the market keeps holding like this, it's going to inure a positive aspect for those people who just got in or are not in and want to get in. And that to me says, looking out, it's going to be very positive. But short term, I think that you got to be a little careful here. Oh, someone said in the den, let me just see where it was. I didn't have a chance to really read it, but I'll read it out loud now because, oh, there we go. P in the den says, there is a major option game going on with equities. That is why the VIX volatility index has been trapped between 11 and 13 with little noise all this time. Oh, no, that wasn't it. There was another one that said something about shorts, longs, and shorts. Who had that? If I can find it. It said that I can't find it off the top of my vision here. So maybe I'll try to find it. But what it said was that the specialists were mostly short and the public was mostly long, the SPY. That to me, I'd get a little nervous with that. That's all. That's really what I wanted to say. So a couple of things I wanted to talk about. Within the context of the market right now, when I go through my list, I have a list for subscribers that I kind of pull. I just keep them there because if I didn't put it there, I'd always forget about them. This way I have to look at them every day. And that list is really very interesting. For instance, in the list I have Berkshire Hathaway, BRK.B. Look at this. It's had a major pullback from the 170, almost 178 level down to 166 here. Look at the weekly chart. And that's just saying to me, this is the out of all the business people, this is the king. This is the guy that doesn't just buy stock. He owns the companies. And that means running the company. It's a big deal. It's not just on a split second you sell the stock. This is you own the companies. And it's pulling back pretty sharply. And it's just, and he's in everything. And it says to me, just be careful here. I think it's worth thinking about it. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 2. S&P's down to 1.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Thinkorswim. Next on TFNN.
Yeah, so Dow's now up to, this is choppy. Watching it closely. Now, a couple of things. I was asked, let's see, buy USO, Exxon, CVX, MRO. The Marathon I hadn't looked at for a little while. It's actually one of the better charts out of the three. I like it. I probably like it a little better that we haven't integrated, but this one actually looks a little bit better. So I'm going to say at 16.36, I would start a little position, start a small position in one of them, but I would put probably right now, I'd say Marathon Oil, MRO, 16.36 up 6 cents, just because I think oil's kind of in play right now, just as gold is kind of in play. And it's telling us that at any moment, either one could have moved to the upside, and if they come down, it's going to be a gentle come down. So yes, I think so. Don't get carried away, but yeah, I think it's one of those that you could be buying some right now. And at 16.36, I'd probably say, you know what, for this one, give it a $15 and 65-cent-ish stop, at least in this initial move right now. And if it starts to climb above peak B at 1664, if it goes to 1665, you could add another small position, and that'll be your trading position, expecting a leg C and then a leg D. Okay, now let's just look at this. So questions, couple of questions in the den. Yes. What is the NDX top? Zita says, I speculate the NDX topped out for some weeks. Yep, I think so. I mean, you know, you don't have to get too carried away, but I do think there's some kind of topping action. The technicals are terrible in the QQ series. It made this last high was made with no veracity at all. There's just no strength in the technicals, and the MACD deflected lower. So if it takes out the high of 133.48, I'm just totally wrong. That's all. Make it real simple. Okay, now we're about to go to this is the final section before the weekend. Two things, don't forget, you've got your Tiger Dollars. This is the best sale I think we've ever had. So go to the front page, check out your Tiger Dollars, and if you are subscribing to anyone, this is a great time to up your subscription for real savings. Now, let's just go to this. I'm going to go back to the VIX index so that over the weekend you can do your own analyses. The VIX index is at 1297 right now. I said that if it can push into the 1328, 1333-ish level or above, as the market pulls back, Dow goes to minus 40 for the close of the week, S&P down maybe 5 points, then I'm going to say to you, hey, I think that the VIX index is in play. Finally, it's in play. But if it closes back down, it's at 1296 right now, it goes back to the 1236 area, the Dow closes up 40 and the S&P closes up 4 points or so, I have to say, you know, chop, 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 sideways action for a little while longer. But it is a consolidation that's begun, and I think that the Qs have just started theirs. If they've just started theirs, you can't expect it to be just a day or two. So that says that the QQQ series, I'm going to emphasize this, to really get veracity to the downside, that is strength and technical in the weekly chart. I don't think you can really say that you've got any big signal at all until the Qs at 131.98 take out and close below 130.50, and almost within a day or two they tackle and they break under the low that was made on the 27th. You remember Monday a week ago, that turnaround has to close under 129.40, and has to do it within. It has to be quite sharp. If it goes chop, chop, chop to the side, you're going to look at this weekly chart and say, hey, yawn, it's just consolidating. I'm looking at my next buys for the NASDAQ type stocks. I don't know. Amazon had a big move. I think it needs time. So, folks, have a great weekend. Of course, we've got the holidays coming up next week. What I'm looking for is some quieter trading, and I would not be surprised if we continue in the slightly lower lows to slightly lower highs period. We'll be watching it closely. Have a wonderful weekend, and I will see you Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.